ladies and gentlemen. Our next panel discussion topic is building investable business. That is going to be our next session. Requesting our moderator and honorable speakers to be on stage, ladies and gentlemen, please welcome them with a big round of applause. The moderator for this session is Sarah Iqbal, Head of Impact Partners, SAJIDA Foundation. Speaker, Craig Bristol Dixon, Founding General Partner, Accelerating Asia. Speaker, Tanveer Ali, Chairman, Constellation Asset Management Company Limited. And Samanzar Khan, Managing Director, AKS Khan Pharmaceutical Limited. Please give them a big round of applause. Thank you.
Thank you so much for that kind introduction. Very good afternoon to everyone, and welcome to the panel discussion on building investable businesses. We've heard a lot since the morning. We've heard really insightful discussions on what makes companies investable. But in this discussion, I really want to deep dive into what exactly companies need to do, what founders need to focus on to really build an image globally for themselves and compete on a global and regional level. As shared by Tanveer Bhai previously as well, as Bangladesh moves towards becoming the 9th largest consumer market in the world by 2030, and with a median age of just 28, the macroeconomic signals are definitely really strong. But turning that potential into investable, scalable ventures requires more than just market size. It calls for the right mindset, strategic clarity, and investor alignment. So in today's discussion, we'll explore what makes a startup or a business truly investable. We'll dive into how early-stage founders can build strong teams, generate real traction, and avoid common fundraising mistakes, and align long-term business strategy with capital goals. So I'd like to first welcome our esteemed panelists for today. We have with us Craig Bristol Dixon. Craig is the founding general partner of Accelerating Asia Ventures, an early-stage venture capital fund and accelerator backing technology startups in South and Southeast Asia. Thank you so much for joining us. We have Ms. Samanzar Khan. Ms. Khan is the managing director of AKS Khan Pharmaceuticals Limited and AKS Khan Holdings Limited, a company focused on strategic investments and operations to maximize growth and market value. Thank you so much, Appa, for joining us. And last but not least, we have Mr. Tanveer Ali. Tanveer Bhai is the chairman of Constellation Asset Management and one of the earliest angel investors in Bangladesh's startup ecosystem. Thank you so much for joining us. So I'd like to now begin with the questions that we have for today. I think my first question I'd like for Craig. Cross-border investments. With Accelerating Asia investing in startups across different regions in Asia, what unique strengths or qualities have you identified, particularly in Bangladeshi companies and founders? And how can founders in Bangladesh position themselves to compete regionally and attract international capital?
Yeah, thank you for that. So we've invested in 24 companies in Bangladesh over the past 6 years in various verticals. I'd say one of the main advantages we see in Bangladesh is a very high unit of talent versus the unit of opportunity. And what I mean by that is the talent that exists in coming into Bangladesh using technology to take over industries can rapidly become a market winner. Whereas when you look at other markets, there's a lot more crowded talent. Now, I actually hope for Bangladesh that changes and the talent actually becomes much higher per capita in the country, and I know we're all working on that. But at the moment, if you can identify certain high talent and high IQ founders who utilize technology to advance their businesses, they can rapidly take over market share and become a market leader. And as an international investor, it makes the market here much more attractive. I think Rahat talked earlier too about a very large percentage of diaspora that are connecting back into Bangladesh and his efforts to increase that level. That's one of the main trends that actually created the large ecosystems in China and India and Indonesia that we're also investing into. And so I think it's a great way to increase the capability of the Bangladeshi ecosystem as well, and we'll be keeping an eye on that.
Thank you so much, Craig. And it's really interesting that you mentioned tech-enabled kind of solutions to be able to get to a stage where they can scale. Referring to that, I'd love for Tanveer Bhai to share a little bit about sectoral opportunities in Bangladesh's ecosystem. I know we briefly touched upon that in the previous panel as well, where it's an open market pretty much for any sector. But from your experience, having invested in so many companies and working very closely with these founders, which sectors or niches do you see the most potential in this market at the moment?
Yeah, I mean, I think if you look at the opportunities for disruption, I think those are probably the lowest hanging fruit. So, it's very common across similar countries like Bangladesh, where you see operations in opportunities in fintech, for example, where very little has been done so far to offer, I guess, unique, dynamic, like real problem-solving solutions for the average Bangladeshi consumer. You look at opportunities in health tech in terms of offering or being able to deliver technological or health-related technological solutions to the average Bangladeshi to expedite health solutions, is a very common industry or common vertical that I think is very important for us to look at. Ed tech, is another one that is one of those holy grails, if you will. We've talked about ed tech solutions. We've got some good companies in Bangladesh working on solving the ed tech problem in terms of being able to deliver education in a customized way that understands the unique learning needs of individualized students and to be able to improve outcomes. So those are three verticals I think that are really interesting. But we can't also neglect the future opportunities which we see obviously in AI. I think Reid Hoffman's video, I think part of the conversation in terms of like future and emerging technologies, it would be remiss of us to not look at like how we can work with AI. Now, obviously, how you define that AI or how you integrate AI into existing business opportunities may perhaps be more important than just working in AI, because that's a pretty vaguely or poorly defined term. But I think AI-enabled or technology-enabled solutions in these opportunity sets, I think, is definitely low-hanging fruit.
Thank you so much, Tanveer Bhai. And you mentioned health tech, right? And the opportunities in that sector. Going into the healthcare space, my next question is for Samanzar Appa. As healthcare is a really key sector for focus for emerging businesses, the healthcare industry itself has its own unique challenges and opportunities. For Bangladeshi startups that are working in this space, what specific benchmarks or milestones do you think they need to show to achieve to become investable?
Thank you very much. That's a great question. Well, I believe in going back to basics when you're building the foundations of a business, be it in the health sector or any other sector, and that's the philosophy that I've followed. The first thing to look at is the problem-solution fit. In the healthcare sector, what is the problem that is being faced by your customers or your consumers, and what is the unique solution that you can bring to them? And that is the first thing that you need to look at as a startup, that whether the product or the services you're offering, does it actually solve what the market is wanting it to be solved? The second thing is, moving on from that, how do you monetize the product or the services that you're providing? Your business model has to be very clear on how revenue is going to be generated. It has to be very clear on how you will achieve scalability, whether you start with a pilot, if you can develop a cookie cutter model, and then expand quite rapidly. Moving on from that, for me, what's very, very important as a founder is the financial feasibility and the financial model of a business as well. It's great to have a unique idea, but is that financially sustainable? Is your model somewhere where you're going to go 10 years, 12 years with cash burns, not hitting profitability, not being able to be cash flow positive, just going for rounds of investment raises? Some startups do that, and many times they do fail. Very few become successful with that kind of a model. For me, a business has to generate profits. Profitability and cash flow positivity is at the crux. Financial statements are extremely important, and that's one of the benchmarks that startups need to kind of achieve. It may not need to happen in the first few years, but your model needs to show that at the end of the day, whether it's 3 years, 5 years down the line, profitability will be achieved. Moving on from that, touching on what Tanveer had said, nowadays, for any business to be scalable, it needs to be backed by technology. It needs to be backed by data that can be tracked, KPIs that can be measured. In the health sector, for example, if you are providing outpatient services, whether it's doctor consultations via telemedicine, whether it's lab tests, diagnostics, if you had one standalone center, it's very easy to manually maintain your data. But to achieve scalability, there needs to be technology that's integrated into the system where it will allow your business to scale up rapidly. Otherwise, it will be impossible. Health sector is a sector where a lot of impact investors are willing to invest, and there are very, very few markets left like Bangladesh that can give huge returns. So focusing on social impact, especially in the health sector, is very important, and kind of defining the impact metrics that you can measure. If it's, for example, if it's for doctor consultations or a telemedicine platform, how many consultations you're doing? What is the rate of return of customer or patients that you're getting? What is your customer acquisition cost, and how is that lower than anyone else in the market? So kind of impact metrics is very, very important to measure. And I mean, I think the last, but definitely not the least, for all startups, in order to be investment ready and to be investable, is to have their documentation ready for investors. You can have a great business, but it's only as good as it comes across on the paper and documents you submit to your investors. Your pitch deck has to be very clear, outlining your journey from the past to the present, as well as your scalability to the future. It also has to outline what your investment ask is, how you plan to use those proceeds, and what kind of returns you're wanting to achieve from using those proceeds. And they also need to see the end game. An investor will also need to see in 6-7 years' time, when they want to exit, what is it that you're offering to them? So I would say these are the things that they need to focus on.
Thank you so much, Appa, for a very elaborate, I think, description of what companies need to be thinking about. And I mean, it's a fact of the matter that these are areas that founders need to think on earlier on in their journeys as founders, instead of much later. Of course, reiteration is just a part of the process and a journey as a founder. But you mentioned cash flows, you mentioned some idea of a roadmap to profitability. And with that, I want to ask Craig about signals of investability, right? For early stage startups in Bangladesh, I know that you have a few healthcare companies in your portfolio as well from Bangladesh. So transitioning from, let's say, pre-seed to seed funding, it requires demonstrating clear signals of investability. So based on your experience, what key indicators do you look for in Bangladeshi startups that showcase their readiness for the next funding stage?
Yes, thanks for the question. So I wrote an article on this recently, and we deal with a lot of this in our program, but my favorite scenario is when we meet a Bangladeshi startup and they have all of these boxes checked already. And so I meet way too many Bangladeshi founders who are emailing me from a Gmail address. They do not necessarily have a business entity. They're raising international capital and trying to get international investors to invest directly into a Bangladeshi entity, which unfortunately at this moment is not usually possible. It's very easy to set up a Delaware C Corp or a Singapore entity before you go out to raise international capital. So I think step one is understanding, are you raising domestic capital or international capital? Depending upon the fork in the road, you need to do different things, right? So if you're raising domestic capital, maybe you can still price everything in BDT and have financial statements in BDT. But if you're talking to me, I unfortunately don't keep up with the exchange rate. And you should be talking to international investors in US dollars, for instance. So having everything converted into US dollars for your charts, your forecast, your reporting, everything else. Every single founder from day one should be sending out a monthly stakeholder newsletter to their existing investors, potential investors, and other people who could help their business to provide updates on what's going on with the company. This can result in investment. It can result in customers. It can result in mentors reaching out to help you with your challenges. It's one of the key things that every founder must do in any market including Bangladesh, obviously. And if you're raising international capital, you need to move. So one of our early investments was Prio Shop, and the CEO, Ashikul, was on the road at least 50% of the time, going to conferences all over the place, and pitching, practicing the pitch, getting feedback, entering pitch competitions, meeting investors all over the place. The closure rate is extremely small. For every 100 investors you meet, you might close half, right? And I don't think I'm far off from that. And so you need to meet hundreds and potentially thousands of investors to raise and close your round. And if you're based here, that means you need to get on an airplane and move to where the financial capitals are and access that capital, unlock that capital, make those relationships. It takes time. There's a concept called lines, not dots. And you need to create a line by going here and then here and then here and advancing the relationship forwards until they feel trust, they get to know you, they feel like they understand the business, and they finally feel comfortable to unlock their wallets and give you some of their capital, and that takes time and investment.
Thank you so much, Craig. And you mentioned how there needs to be a lot more visibility on the traction and the progress of these companies if they are to be put on the map for global investors. So monthly updates, you mentioned that as critical to keep the ecosystem aware of their existence. So establishing credibility at pre-seed stage in Bangladesh. My next question is for Tanveer Bhai. Early stage startups in Bangladesh often face hurdles in securing visibility and demonstrating traction. Based on your experience, what practical steps can founders take to build credibility at the pre-seed stage?
I think it's a two-way street in the sense that we see a lot of founders that perhaps undervalue themselves and their businesses. They sometimes tend to write off what they've accomplished so far, and so. But on the other hand, sometimes you see the other side where you see founders that are overvaluing what they've accomplished and are talking more rather than doing. And so I think it's about finding that balance. I think it's about finding the founder that is confident in their business model. And I think that sending the right signals are that I'm a founder and I am dedicated towards building this business, and this is why I'm doing this. Where all too often, you run into part-time founders who are saying, hey, I want you to invest in this, and this, and this, and this, and this. And you have to differentiate between something they're really passionate about versus a lifestyle business, and I think it's a very important delineation in terms of the investment decision process for sure.
Thank you so much, Tanveer Bhai. And with that, I'd like to ask Samanzar Appa about innovation in Bangladesh's healthcare sector. As a leader in the healthcare space, what emerging opportunities or gaps do you identify in this particular industry? And what should businesses or startups focus on to create additional value and drive growth in this sector?
So the healthcare sector, especially in Bangladesh, is full of challenges. And being from the sector, I'd like to say full of very complex challenges. But as we all know, as founders and business builders, challenges equal risk, risk equals opportunities. Healthcare, I think, rests on three pillars for any market, and that's quality, accessibility, and affordability. Whatever gaps that might exist in any market, be it Bangladesh or abroad, it is some kind of a gap in some form in these three areas. If we take Bangladesh as the example for the healthcare market and we look at accessibility, we see a lot of healthcare concentration in the urban and semi-urban areas. You move into the rural areas, there is very little access to quality healthcare. Affordability is the second issue in Bangladesh as well. We're not a country that has a robust insurance model. About 85% of healthcare spend is out of pocket. So people are actually willing to pay, but they are not getting the quality healthcare that they require at the right price. So those two, I would say, go hand in hand, affordability and quality. When it comes to affordability, and it's a payer model, out-of-pocket model, unfortunately, consumers are taken advantage of, given, we know the same story that we hear in Bangladesh. You go to 3 different places for your lab tests, you'll get 3 different results. Why is it that it is not benchmarked against one standard? So I think these are the areas where startups can focus on, can find ways of managing and mitigating this gap by offering products and services.
Thank you so much, Appa. And since we're close to closing in on today's session, I have one last question for each of our panelists regarding investor confidence. So to Greg, if you can distill all of your experience so far as a founder, as an investor, as an ecosystem enabler, what is the one piece of advice that would be the most effective way for a startup to build investor confidence during their early stages?
Just keep on learning. You really need to learn global standards, how to talk the lingo, how to understand which metrics and which kind of reporting standards, which formats of pitch decks and verbal pitching that people are expecting, and join that global community of top-level founders who are going to be accepted internationally, not just domestically here in Bangladesh. And a lot of that's just like, again, getting out there, pitching, getting feedback, finding out who actually knows what they're talking about in the ecosystem, other founders especially, and learning from the best, and integrating that as fast as possible. So I think that's the main thing. One thing I did want to plug is one of our portfolio companies is doing online microinsurance that's hopefully going to address some of the gap that you were just talking about, called Chaya. So little shout out to Chaya. I believe they're fundraising too, so if you meet them, they're probably looking for a check before they hit the big time and sell, and you miss the boat. So there's my pitch for Chaya. But yeah, keep on learning to all the founders out there and upskilling yourself.
Thank you so much, Greg. The same question for Samanzar, Appa. What do you feel from your experience as a founder, as an ecosystem leader in the space of healthcare and beyond? What would you say startup founders should do to build investor confidence?
Please focus on local industry knowledge. Very often than not, a lot of startups look at a model that works in another country and think, hey, I should just replicate that and that will work perfectly. No, that's not the case. And especially healthcare, which is such a sensitive area to work with. You need to understand local challenges. You need to understand the local market. You need to be sensitive towards your customers being of a certain religion, what kind of expectations they might have from healthcare providers. So my one big request to startups would be, please do your research on local market and industries and adapt your businesses to meet local challenges. Do not just replicate something that works in the international arena.
Thank you so much, Appa. The same question for Tanveer Bhai. All of your years of experience in angel investing and supporting these companies, what would be your one piece of advice?
Yeah, I mean, I think it's kind of a combination of what Craig and Samanzar both said, that founders need to I guess, look at the larger data set of information out there and do a good job of distilling that information, separating signal from noise, understanding, what follows the guidance of best practices, and I guess, by that same token, also be ready to iterate, to make changes to not just to the business, but to their mental models, to how they think about the business, to how they are promoting the business, how they are, how they're selling the business opportunity. The business opportunity may change, but that may also necessitate them changing the marketing and promotion of the business opportunity itself to investors, and they have to be willing to do that, based on global changes to, investability or mandates or availability of capital. And so I think that just being dynamic and understanding how the landscape is changing and adapting to that, I think is something that would really go a long way.
Thank you so much. With this, I'd like to really appreciate each of our distinguished panelists for sharing their insights. And I hope all the founders and individuals who are present with us today have taken really valuable notes from this discussion. With that, I'd like to close for the session. Thank you so much.